All right, guys, welcome to the Year 12 course and the very first key knowledge dot point in the very first outcome of Unit 3. So we can see here, Unit 3 is all about managing a business. Outcome 1 is about just setting down some business foundations. Now, the key knowledge dot points in this outcome are not really connected together and don't flow in the way that they do for basically the rest of the Year 12 course. There's just a whole bunch of different topics in here, quite disparate and separate, but just kind of set down some foundations, some basics of business just to get a head around before we get into some of the later outcomes, which tend to be focused on a particular area of business operation. So, types of business is this first key knowledge dot point. And in fact, if you did the Year 11 course, when we get into this, some of this is going to be familiar because there was also outcome 3 in Unit 1. We also looked at types of business. And there is definitely some kind of replication of information here. In fact, look, there's the study design for the whole study design for outcome 1 laid out for us there. Always start the videos, as you know by now, looking at that. And then we highlight the particular key knowledge dot point that the video is going to be about. So if you look at this, types of business including sole traders, partnerships, private limited companies, public listed companies, those 4 we covered in Year 11, but now we're adding a further 2, social enterprises and government business enterprises. So as we go through those first 4, this should ring some bells and jog some memories for those that did Year 11 or did Unit 1. Okay, so what is this all about? So now I'm kind of going back to assuming zero knowledge. So those that did not do Year 11, so we can all kind of catch up. So what's this about? Look, every day we are constantly interacting with businesses. There's a really wide range of businesses, all different types of business, different size businesses. They vary in how many owners they have. And they also vary in what legal status or legal structure that they have. Okay. Now, that's not necessarily apparent when you go in and deal with a business. This is kind of not stuff that's necessarily visible to you. This is kind of behind the scenes, how the business is set up from a legal point of view. Okay. It's that final aspect that we're talking about here, the legal status or the legal structure of the business. There's a range of options, and we just saw them when we looked at the study design key knowledge dot point. There were 6 there. That a business owner can choose from in terms of their structure. Each of these different structures has a range of different features, and they all have their advantages and disadvantages as compared with the other business structures that you might choose. So as a business owner starting up a business, it's really important that you're aware of these different options so that you can make the right choice given your circumstances and kind of what you want to do with your business. Okay, so this is really important for a new business owner to kind of have their head around. Before we get into that, really, really important message. Again, I'm just going to emphasize, and this is actually a good one to do it with, this idea of sticking to the script. Again, if you did Year 11, you would have heard me say this multiple times. If you're new, sticking to the script means a study design. Now, that sounds kind of like maybe obvious, but this is actually a good one to demonstrate how this or why this is important, okay? Go back to the key knowledge dot point. You can see the 6 that we've got there, okay? They're the ones that we're going to be covering. That is basically the legal structures that VCAR wants us to use. But if you went and just Googled types of business or types of business structure, you're going to get thousands of different links, and they're all going to give you different lists of types of business structure. So here's one example. I think this might have been actually the top link when I actually did this myself. And you can see that list there, sole proprietorships, partnerships, corporations, and so on and so forth. There's definitely some commonalities in terms of the language there, but that is not, in fact, there's only 5 there. That's definitely not the 6 that we're going to be looking at. More lists here. Look, that top link there, there's 7. And again, partnership is there, sole trader is there, but then trust, proprietary limited, corporation, these are not there. And again, there's 4 on that website. So basically, what I'm saying is don't try to answer these questions by like using Google. So if you Googled types of business to help you answer exam questions for this topic, oh, excuse me, for this topic, you're going to end up talking about types of businesses which do not exist on our study design. It's going to get you nowhere. So these are our types of business. These are the ones in the study design. This is what we're going to focus on. Okay. Now, the first 4 of them, the ones in the green there, basically, we'll talk about these in that order as they go down the screen. They basically, they're increasingly complex. A sole trader is a very simple business structure. And then as we move through partnership, private limited company and public company, they become much more complex. Social enterprise and government business enterprise, those would be set up for different reasons. Okay. So they kind of sit outside this idea of the spectrum of complexity. But as we kind of get through these, and by the time we finish the video, that will make a bit more sense to you, I think. Now, when you are starting a new business, which options from the 6 are available to you? Because not all 6 are. Basically, those green ones are your options. If you're starting a business, you could choose to set yourself up as a sole trader. You could set yourself up as a partnership, and by the sound of the name, you would have to have at least one other person you're working with there. You could just set yourself up as a private limited company, or you could set yourself up as a social enterprise. What you cannot do when you're just starting a new business is set yourself up as a public company or a government business enterprise. And why that is will become apparent as we move through this video. Now, before we even get there, just something I need to cover off on, a little bit of language, which is really important to understand. And this does cause some confusion, and we'll talk about this again in class, but just to introduce this idea. You hear talk about the public sector and the private sector. Okay, if you're talking about the economy as a whole, there's lots of different ways to kind of compartmentalize or split the economy. But one way to do it is say, right, we have the private sector and we have the public sector. And the public and the private sectors combined together is our entire economy. Now, let's start with the public sector. The public sector, basically, keeping it really simple, is anything which is owned and run by the government. Okay, so it's the governmental services. So federal, state, and local. If you work in any of those levels of government, you work in the public sector, you are a public servant. Okay, that's where this term public servant comes from. So me as a teacher in a public school, I am a public servant. I work in the public sector. If I was doing this exact same job at, say, Eltham College, a private school, I then would be working in the private sector. Same job, but private sector instead of public, because that's essentially a private business. So, federal level, federal government is split up into major departments. There's about, I don't know how many, 15 to 20 sitting in there, department of, so on and so forth. They're the main departments. And then there's about 150 various agencies that kind of sit outside of those main departments as well. So this is all federal stuff. So for example, in their Air Services Australia, that's the agency that looks after air traffic control within Australia. So they look after all the air traffic controllers based at the airports, so on and so forth. Okay, so that's your federal. State level, again, we have departments of, and there's about 10 of them. So Department of P&C, Department of Education and Training, so on and so forth. And then again, there's a range, lots and lots of other agencies and bodies that sit outside of that. And then, of course, we have local government. So Nillumbik, City of Whittlesea, Banyule, most of you guys will live in one of those 3, I would imagine. There's 537 local councils in Australia, 79 of those are in Victoria. So all of that stuff we just looked at is the public sector, okay? Just in terms of scale, you don't necessarily need to write this down, but there's the breakdown of how many employees. Government is pretty big in Australia. Not far away from 1.9 million people work in government. The number of people employed in Australia is 13 million, so roughly 15% of the workforce in Australia are employed in the public sector. Okay. Now these figures are kind of approximate and they are kind of constantly changing, but ballpark, that's kind of what we're talking about. Private sector is basically everything else. All of those business structures, the 6 that we're going to look at today, all of them operate in the private sector. Okay, so the private sector is the part of the economy which is owned by private individuals or groups. Now, when we get to government business enterprises, it's a little bit different. But the key one which causes confusion here, public companies still operate in the private sector. So just make a good note of that. And when we get to talking about public companies, because of this definition, everything owned by private individuals or groups of private individuals, that will make sense. But this is the key. Often people get confused and say public companies operate in the public sector. They don't. Public companies still operate in the private sector. So hopefully that makes some sense to you, this difference between the public sector of the economy and the private sector. Right, let's get into our 6. So first one, sole trader. So again, should be familiar to you if you did this last year. So this is a private sector business, is owned by one person, okay? That person is legally responsible for all aspects of the business and is also entitled to keep all of the profits after tax has been paid, okay? That's a simple definition of a sole trader business. The owner is responsible for all of the decisions that are made. They can trade under their own name or a registered name. They may or may not employ other people. So again, here, this sometimes causes confusion. Because the word sole trader is used, sole meaning one, it doesn't necessarily mean that you are actually working on your own. You can still employ people. The word sole refers to the ownership of the business. You could employ 1,000 people, but you could still operate as a sole trader. You probably wouldn't, to be fair, but the sole is the ownership, not on your own in the business. Now, the key with this is the individual, like the owner, and the business are the same legal entity. Okay, that means that the sole trader has unlimited liability. So that point I'm just making there, it's one and the same. The same legal entity means that the business owner has unlimited liability for what goes on in a business. So little asterisks there. Let me just explain before we move on to anything else what we mean by this. Okay, so where the business owner and the business itself are the same legal entity, the owner is responsible for all business debts if the business gets into trouble and can't pay its liabilities. So in other words, if you are set up as a sole trader with unlimited liability, because that's part and parcel of it, there is a risk that the business owner, if things go wrong, could lose their own assets, okay? Your own personal assets, house, cars, shares, whatever you might own, can be seized to recover any debts incurred by the business. And the reason being, because like we just said, the business owner and the business, from a legal point of view, is one and the same thing. There is no difference. This will be kind of contextualized a little bit more when we look at operating as a company in a little while, where that changes. So from operating as a sole trader, the owner is exposed to greater personal risk as compared with some of the other structures we'll look at in a little while. So hopefully that makes sense to you. Okay, so there's a little explanation of unlimited liability, where the shareholders, the business owners, are only legally responsible for the debts of the business up to the value of their shareholding. So in other words, if you have limited liability, which applies to some of the later business structures we'll look at, your personal assets are not at risk. So not too complicated an idea, but a really, really important thing to understand, because it really kind of distinguishes, there's a key distinguishing point for some of these business structures that we're looking at. Now, advantages of setting yourself up as a sole trader. And again, when you advantages and disadvantages, obviously that's a comparative thing. So this is compared with other structures. So compared with other structures, setting yourself up as a sole trader is relatively simple and relatively cheap to do. And also, if you're going to wind the business up, in other words, finish the business, also that is cheap to do. The owner has total control, no disputes to be had with other partners or business owners, which will happen in other types. Minimal government regulation, that's one quite a positive, some people see as a positive, as opposed to setting yourself up as a company. Set yourself up this way, the government kind of leaves you alone a bit more. And of course, the owner keeps all the profits. There's an advantage. In terms of disadvantages, that unlimited liability, that's a definite big disadvantage. The idea that, if things do go wrong, your own personal assets are at risk. So that's probably the biggest disadvantage. It can also be more difficult to obtain finance than with some of the other structures, like a limited company, which we'll look at shortly. Banks may be less keen to loan to a sole trader than to somebody that set themselves up as a company. And the sole trader has to manage the entire business and kind of needs to be multi-skilled. Or if you're not multi-skilled, and when I say multi-skilled, you've got to, understand finance, marketing, the operation of the business. There's so many different facets to running a business. So either you have those skills, which is great, or you have to buy in those skills, which then becomes expensive. So another potential disadvantage of running this type of structure. All right, structure 2. Okay, still quite simple, partnership. So this is a private sector business now owned by 2 to 20 partners. Now these numbers are important defining characteristics. Okay, 2 to 20. Again, same legal entity as those owners. So we still have unlimited liability as we did with our sole trader. 2 types of partnership we could go for. So this is, the features. All partners have unlimited liability, or we can have a limited partnership where one or more of the partners' liability is limited to the proportion of their investment in the business in the first place. And partnership agreements could be drawn up to explain which way this particular partnership is set up, so that if there's any disputes later, we can go back to look at the partnership agreement and see how things are going to be divvied up. Now, one also point, and this is a language thing, but it's kind of important as well. If you're talking about the owners in a partnership, don't refer to them as shareholders, okay? Refer to them as owners or partners. Shareholders refers to incorporated businesses, which we get onto in a minute. So it's just, if you start using the language shareholders, it just becomes a bit unclear and it's just not accurate terminology to be using. So refer to the business owners in a partnership as either owners or partners. Advantages, again, like before, still simple and fairly inexpensive to set up. Now, of course, an advantage, and this is compared with a sole trader, workload can now be shared amongst the partners. Decision making and all of that can be shared. Risk and debt is also shared. Each partner might now bring some different skills and expertise with them, rather than just, you as the sole business owner kind of having to do everything. It can also be easier to take time off, because if you are the sole trader, you're the only person kind of in charge. You go on holiday, what's going to happen with the business? Of course, if you've got partners, you can share that. And there's more people contributing capital to the business, capital meaning money. So you've got more people investing in it, so you can raise more money just because there's more people involved. Disadvantages, again, unlimited liability, just exactly the same as we talked about with our sole trader. Now there is the potential for disagreements because we have a range of different people involved, our different partners. So if we're not all on the same page, it can end up a bit messy. You also have the risk, and this depends on how the partnership agreement is drawn up, but you now potentially are going to become liable for debts incurred by other partners. So you're really kind of trusting these other partners to be doing the right thing, because you've got unlimited liability, your own personal assets could be at risk because of mistakes other people involved in the business, the other partners make. So there's an extra kind of level of danger or risk there. Of course, now we're sharing the profit amongst a range of partners as opposed to taking them all ourselves, like with a sole trader. And one other new one here, there is no perpetuity to our business. So in other words, if one partner leaves, you have to kind of form a new partnership from scratch, whereas that isn't the case when we go down to our later business structures. So no perpetuity, no ongoing life of the business. Someone leaves, we form a new partnership. Okie doke. Right, private limited company. So now we're getting, remember that, the more complex, we're getting a little bit more complex here. This is now an incorporated business. Incorporated business meaning you're actually setting yourself up legally as a business, and we now have this limited liability going on that we were missing before. Owned by 1 to 50 private shareholders. Again, those numbers are important. 1 to 50. Now, incorporation, as I just mentioned, to become an incorporated business. Incorporation, the legal process of creating a new corporation, which is its own legal entity, in other words, different to that of the owners. So again, we come back to this idea of limited and unlimited liability. If you're going to incorporate your business, you're now separating yourself legally from the business. So now yourself, the business owner or the business owners, are not the same legal entity as the business. We've got some separation here, which is why you'll find out your personal assets are no longer at risk. Okay, so features, we've just said before, owned by between 1 and 50 private shareholders, controlled, managed by a team of directors. Now, those directors might be those shareholders in the business, but they might not be. They don't have to be. They could be appointed, an appointed board of directors that don't actually own the business. Shares are not freely available to the public. So myself as just a member of the Australian public can't buy shares in a private limited company, which you can with the public, which we'll get onto shortly. Shareholders have limited liability. So we've just talked about that a little bit. So that's a really, really key one. And one way to identify, if you see the full name of the business, a private limited company is going to have proprietary limited or PTY limited at the end of its name. So if you're ever in a case study and the business has proprietary limited or more commonly PTY limited, that in and of itself tells you we're talking about a private limited company. And one of the things you have to do in questions is, given some case information, you might have to identify what type of business structure is being used. So there's the biggest clue. If it mentions that in the name, you know it's a private limited company. Just some examples of private limited companies. Again, once we've done this, public companies, once we've looked at public companies as well, people tend to think that these massive companies must be public companies. Not the case. Some of Australia's largest companies are still held privately. So these ones you see in front of us, some of Australia's largest privately held companies. Hancock, you'll be aware of most of those. Linfox, the trucks, the logistics and haulage companies. You see the Linfox trucks going down the freeway. VCE Packaging, PwC started out life as an accounting firm, is now kind of accounting and consulting business, operates worldwide. Hancock Prospecting might not be familiar with you, but you may have heard of Gina Reinhardt, who basically is at the head of that. It's a family business started by her father. She now runs that business, a big mining company out west, actually called Hancock Prospecting, and cotton obviously you'll be familiar with. Now, advantages of setting yourself up as a private limited company. First off, limited liability, biggie, protecting your personal assets. Also, companies pay tax on profits at the prevailing company tax rate, okay, which is 30% or lower, depending on what type of business you're doing, which is a reduction to personal income tax. Sole traders and partnerships, the owners pay tax on the profits made as income tax. Now, income tax, particularly when you start talking about earning a lot more money, income tax rates are higher than company tax. So one reason that you might want to set yourself up fairly early on as a private limited company as opposed to a sole trader is to reduce your tax burden. Perpetuity now exists. We talked about lack of perpetuity with a partnership. This now exists. So the life of the business extends beyond that of the shareholders. So if you change shareholders, the business just continues as is. And easier now to obtain finance than sole traders or partnerships. Banks just have a little bit more confidence because there's a bit more rigor going on with setting up a company. So banks often are a bit more willing to lend money to this type of business. Disadvantage is much more complex and expensive to establish and operate compared with sole traders and partnerships. And there's also increased reporting requirements to the government. Earlier on, we said that with sole traders, the government kind of largely leave you alone. But with this type of business, now the government is much more interested in what you're doing. There's more regulations, more reporting you need to do. So there can be a definite disadvantage. And also, shares cannot be traded freely as they can with a public company. Already mentioned that one as well. Okay, structure 4, a public listed company. Now, this one, an incorporated business that is owned by the general public. These are called shareholders, and the shares are listed on the Australian Stock Exchange, the ASX. Owned by a large number of shareholders who are members of the public. So once you turn 18, you can go into the ASX website and you can buy shares in any business which is listed on the ASX, or in other words, any public listed company. Telstra, for example, has over 1 million individual shareholders. Okay, a lot of Australians own Telstra shares. Shareholders have limited liability, so we're still on that theme. Now, when a business first lists on the stock exchange, or that process is called floating, you might hear about a company floating. That means that it is being converted basically from a private company to a public listed company. That process is called an initial public offering, where basically the shares in that business are offered to the public, and that kind of raises a whole bunch of capital and it starts the process. Public companies have limited or LTD at the end of the name. So before we have proprietary limited or Pty limited, in case material, if the business just has limited or LTD at the end, again, that screams out that this is definitely a public listed company. Okay, so some examples of public listed companies here. I don't think any of those you would are CSL, Commonwealth Serum Laboratories. This is a pharmaceutical company, actually originally owned by the government, and the government floated it, sold it off to the public. If you'd have bought shares in that 20 or 30 years ago and still had them, you'd be doing very nicely. They've done very, very well. Wesfarmers is actually a holding company that owns a lot of different brands. Did own Coles. I'm not sure if they actually got rid of Coles, but then Officeworks, Bunnings, a whole bunch of different brands owned by Wesfarmers. BHP Billiton, a huge mining company. Okay, some advantages of being a public listed company. Actually, one thing I will mention again, this idea that you can't, when you're starting a business, you just can't become a public listed company. Public listed companies are always huge, okay? You have to have been operating previously in some format to become a public listed company. It has to be huge. You're going to be selling to the public. You know, if you're just operating a little business on your own, you're not going to get the public to buy shares. You're not going to be able to list it on the stock exchange. So these are all big, big businesses. So you don't have this option when you're setting up your business. So public listed company advantages, limited liability. Again, easier to raise capital now, but this way, all you do is by selling more shares to the public. And sometimes public companies do this. Medibank did this a little while ago. They did raise capital. They sold more shares to the public, raises money, more people can access the shares. We also have perpetuity, as with our private limited companies, and company tax is paid on profits. Okay. Disadvantages of being a public listed company: very, very complex and very time consuming to establish. Like I say, you're not going to do this from the beginning, but once, if you're a private company that decides we're going to float and become a public listed company, hugely complex process to go through. Very expensive to maintain, much, much greater accountability and reporting requirements to the government. You have to produce annual accounts, which are kind of visible to the public. Lots more regulations to kind of adhere to. And also potential loss of control compared to if you were operating as a private company. Once you go this direction, you're not going to have as much control over the business as you would have done prior. So could deem that as being a disadvantage. Right, our fifth type. So this is the new one, okay, if you're comparing with year 11. Social enterprise. This is a very specific type of business. So still a private sector business. Again, don't forget that. But now this exists with the purpose of fulfilling a social need through distributing profits to benefit a specific cause. Generally either environmental or some kind of community cause, okay? So in other words, what we're saying there is the primary reason for being of the social enterprise isn't for the owners to get rich. It's still to run a profitable business, but rather than you getting rich, you're going to kind of channel profits made, or at least a large percentage of them, into whichever social cause it is you're trying to support. Just to put some context around this, as of 2022, there's over 3,500 social enterprises trading just in Victoria, employing around 60,000 people, and they contribute over $5 billion to the Victorian economy. So this is no small beer. This is a big sector, and it's a growing sector. There's more and more businesses which are kind of setting up as social enterprises. Now, the key with social enterprises, they still need to be a commercially viable business, okay, that makes a profit. The difference is what happens to that profit once it's made. And to be deemed a social enterprise, at least 50% of those profits have to be channeled straight to whichever cause it is that you are supporting. In class, we're looking at a few activities looking at some social enterprises to give you a bit more of an idea. Now, they might receive some grants or some other government funding, as well as the revenue from the sale of goods or services, whatever it is that they're trading in. But the revenue from the sale of goods and services is going to be the predominant source of income. So it differs from a charity. These are not charities. Charities are based on donations. Here, you are still selling a good or a service. You still have to operate a commercial business with products and services that people want to buy. But like I say, the difference here is what happens to the profit once the profit is made. Just an example to put out there, one you're probably familiar with. Thank You. Social enterprise that started about 14 years ago now in Melbourne. From the sales of its water, body care and food products, the company donates funds to safe water, hygiene and sanitation programs and food security programs in about 16 different countries. This is as of 2022. Again, this can change, but that's kind of what they're all about. So the profits that they make, you go to the supermarket and you can see Thank You. These days, they got out of the water game. Really, their focus is more on the hand soaps and body gels and stuff. When you look at those products on the shelf at Woolies, you wouldn't necessarily know, if you didn't know, that actually you're supporting a social enterprise. But in fact, you are. Your money's going to do some good somewhere. Street is another one, a hospitality-based social enterprise, and they provide training and support to disadvantaged young people. And they do this through a range of outlets, cafe kiosks, a bakery, and also a catering company. And they reinvest 100% of their profits from the operations of their business back into their cause. Okay. So again, that's a fairly well-known social enterprise, but we'll look at some more in class too. Structure 5, social enterprise advantages. Okay. So as they are supporting a social need, the community are often drawn towards them, i.e. customers, because they want to do good themselves. So in other words, it kind of just by dint of being a social enterprise, it can actually make your products and services more appealing and therefore increasing your profits. So I guess if the average punter goes to the supermarket and you have a choice of 2 products and one is being sold by a social enterprise, most people want to do good. So you might go, I'll buy the one that is produced by the social enterprise because I know that, my money is going to go to a good cause. So actually by being a social enterprise can actually be give you a competitive advantage in the market as well. Another advantage, you also tend to have very loyal staff and good staff morale in these businesses because the types of people that work for these businesses usually hold values which are aligned with the owners and with the business itself, people that want to do good. Okay, so that's just another. And when we talk about loyal staff and good morale, there's so many advantages to that. And we look at that in a little bit more detail in the second outcome of Unit 3. Disadvantages. It can be a bit more difficult to obtain finance to establish the business, I guess, because the banks, the financial institutions are a little concerned that maybe you're not going to be as commercially driven to make money because you're all about the good cause and their money might be at risk. So there is that. And it can also be difficult when you really get into the nitty gritty of this. it can be difficult to focus on both financial and social objectives at the same time, because often they're kind of at loggerheads and they're pulling in different directions. So to actually focus on both those two objectives, which you have to do to run a social enterprise successfully, that can be a challenge. Structure 6, government business enterprise. Here's 3 examples: Australia Post, Defence Housing Australia, and our NBN are 3 examples. There's not many examples of these, but these are 3 examples. This is now a government-owned business that runs commercial activities with the goal of making a profit. If we go back to when I was talking about public and private sector and all of those government departments, whether at federal level, state level, or local councils, all of those government departments are not there to make a profit. They're there to serve the community. The difference here is they look on the surface like a business. They run commercial operations and they have to make a profit, but they are carrying out government policy whilst delivering to the community. Okay. You don't really need to get into too much detail with these, but basically they're owned and operated by the government. They provide an essential service, but they seek to make a profit through the provision of that service. That's what differentiates them from a standard government department, which is operating in the public sector. And that's why we say these sit within the private sector. I think Australia Post, they have lots of competition in the private sector now, lots of different courier companies, delivery companies, and of course, Australia Post outlets sell lots of different products as well. So they're still owned by the government, but they have to make a profit, but they're still providing a service to the community. Okay, they aim to increase their value and their returns for their shareholders, i.e. the government, just like any other business, and a board of directors appointed to control and manage the GBE, kind of like any of the types of companies we saw before. Advantages of having GBEs, look, they result in the provision of services that the private sector might not wish to provide. So, for example, take Australia Post. Can you imagine if before Australia Post existed, how expensive it would be to set up a postal service for the nation? Okay, private business is not going to provide that service. It really had to be the government providing the funding to do that sort of thing. Okay, once it's set up, then it's handed over as a GBE and then can be run for profit. But if it wasn't set up by the government, a postal service, a national postal service, is just not going to happen. It's too expensive for private individuals to set up that type of operation. So hence the first bullet point there. And also can provide some healthy competition for the private sector. So again, going back to courier services, DHL, for example, Australia Post compete directly with DHL with some of those services, and it gives them, that private sector, some good competition to go up against. Disadvantages. Problem with these is, as the government changes, from Liberal to Labour or back the other way, the strategic direction of these GBEs can change because obviously the government policy changes. So that could be quite annoying. You might spend 4 years kind of with certain objectives, and then a new lot, government changes over, and then suddenly you've got some different objectives, and it can kind of, flip around. So that can be quite frustrating. Linked into there, I guess, there is the potential for political influence because it's government owned. And that's not necessarily a good thing, having government influence in the operation of a business. Potentially not as efficient as private sector businesses. Anything government owned, and this applies to the public sector as well, there tends to be inefficiencies in a way that you don't see in privately run or publicly owned businesses. Okay, there's not such a focus on managing costs. So here are our 6 types. So now you should have a good set of notes on each of those. Some features, define each of them, a little set of features, the advantages and disadvantage of each of them as compared with the others. So you need to define features, advantages, and compare. So that's the only thing we haven't done, but you might be asked to compare, say, operating a sole trader with a private limited company. So then you're just using the task word compare, so coming up with compare is similarities and differences. with the two. So you would just use that based on your notes, and we'll get lots of practice at doing that. So applying the content to some questions, look, using evidence from the case study, outline what type of business Manita Mining is. So there's one where you would have to, look, there was lots of case information, but within it, it said the business's share price on the Australian Securities Exchange, blah, blah, blah. Already that tells you that that must have been a public listed company because it's talking about listed on the ASX. So that pretty straightforward. Outline the characteristics of a private limited company. So your notes now, you should be able to do that. 2 marks, give me a couple of characteristics. Okay, this is coming from the VCAR, because these are actual past exam questions. These are the comments coming from VCAR. Define the term partnership. Okay, so you now have definition. Again, there's some notes here you can look through. I'm not going to talk through that. This is just to give you an idea of the sorts of questions you're going to come across. Outline one reason a business may choose to operate as a partnership rather than a sole trader. So obviously what you're going to do there is go to your advantages list, okay? And you come up with this stuff. And that is basically it, guys. So look, a bit of a long one. They're not all as long as that, don't worry. But there was a lot of stuff in there. Make sure you've got a good set of notes to refer to, nice and clear, nice and organised. And I will see you back for the next key knowledge dot point. I will see you then. Cheers for now.